Hi, everyone, and welcome back. This week, the recycling markets feel like they're operating in a state of war. And I'm not talking about vessels alone. I'm talking about volatility, anxiety, and recalibration happening across the board.
That's exactly it. There's a clear battle right now between buyer caution and seller expectation. And layered on top of that, you've got geopolitical tension, commodity swings, currency pressure, and fragile steel markets all colliding at once.
The macro backdrop remains unstable. Ongoing geopolitical friction is keeping oil volatile, commodities reactive, and emerging market currencies sensitive. And when currencies start moving in the subcontinent, recycling markets immediately shift into defensive formation.
Because at the end of the day, steel is the anchor. And this week, steel hasn't provided the confidence recyclers were hoping for. Plate prices across the region have struggled to build upward momentum, and that's directly impacting bidding appetite.
Let's start with Bangladesh. Activity is present, but it's disciplined. Recyclers are engaging, yards are functioning, but there's no aggressive chasing. Buyers are acutely aware of where steel stands, and they're protecting downside risk.
And financing conditions still matter. Even when recyclers want tonnage, liquidity and LC dynamics slow execution. So negotiations are detailed, slower, and highly price sensitive.
India feels calculated as well. Domestic steel hasn't offered enough strength for recyclers to stretch. Add to that currency fluctuations, and buyers are running extremely tight numbers.
There's still appetite for quality units, especially HKC-compliant tonnage. But Indian buyers are being selective. They're not stepping forward unless the numbers make defensive sense.
Pakistan remains structurally constrained. There are moments of interest, but broader financial and economic pressures continue to limit confidence. Without a meaningful steel recovery or stronger macro stability, it's difficult for Pakistan to push pricing leadership.
And then Turkey, which continues to mirror imported scrap movements and broader European steel sentiment. The Turkish market is cautious, almost surgical, with offers reflecting every movement in scrap import pricing and currency.
Now, what's particularly telling this week is that even without a flood of incoming tonnage, prices haven't meaningfully strengthened. That tells you this isn't a supply-driven softening, it's psychology-driven caution.
Exactly. Buyers are protecting margins. No one wants to be caught long in a volatile steel environment. So, while there is demand, there's no urgency.
On the supply side, freight markets are playing a key role. We're not seeing a dramatic spike in recycling candidates yet, largely because certain freight segments are still providing owners optionality.
But that balance is fragile. If freight softens further, especially in weaker sectors, we could see a more visible flow of vessels toward the beaches.
Let's talk pricing levels and ranking, because that's where the hierarchy becomes clear. Right now, Bangladesh continues to lead the demo pricing table. For larger LDT units, we're generally seeing offers in the higher range compared to the rest of the subcontinent.
India is sitting just behind, competitive but disciplined. Offers are close, but typically a notch below Bangladesh, depending on unit type and compliance profile.
Pakistan is trailing the top two, reflecting its ongoing financial constraints and cautious banking environment.
And Turkey remains at the bottom of the pricing spectrum, aligned with softer imported scrap fundamentals and a conservative domestic steel outlook.
So the ranking remains Bangladesh first, India second, Pakistan third, Turkey fourth. But the spread between them is being shaped more by risk tolerance than by aggressive demand.
Looking ahead, there are three key watch points. First, geopolitical developments. Any escalation or easing could immediately impact oil and steel sentiment. Second, currency stability across the subcontinent. Even modest depreciation can materially change recycler math overnight. Third, local steel plate direction. Until steel finds firmer footing, recyclers will remain defensive and highly disciplined.
Overall, this is a market in tactical mode. Buyers are present but strategic. Sellers are testing levels but realistic. And everyone is watching the macro picture before making bold moves.
It's not a collapse. It's not a surge. It's a standoff.
And in standoffs like this, discipline determines who wins.
That's it for this week's Market Insight. Thanks for listening, and we'll be back next week with more clarity from across the global ship recycling markets.
Stay sharp, stay informed, stay safe, and we'll see you next week.